India's chartered accountants, or CAs, are facing a new reality. A new audit rule mandates a comprehensive audit trail for every financial transaction. This regulation represents a significant shift in financial reporting, demanding a meticulous record of every action taken during an audit. While the intention is to enhance transparency and accountability, CAS have expressed concerns about the practicality and potential burdens of this new requirement. The new rule requires maintaining detailed logs of every step in the audit process, including who accessed what data, when, and what changes were made. This level of granularity aims to create a comprehensive record that can be easily reviewed and audited in case of discrepancies or irregularities. While this granular approach promises to strengthen financial integrity, CAs are grappling with the sheer volume of data this rule generates. The Institute of Chartered Accountants of India, or ICAI, has acknowledged these concerns and is actively engaging with the government to address them. The transition to this new audit trail system is expected to require significant adjustments in terms of technology, training, and workflow. The coming months will be crucial for both CAs and regulators to navigate these challenges and implement the new rule effectively. One of the biggest concerns raised by CAs is the sheer volume of data generated by the new audit trail requirement. With every click, edit, and calculation needing documentation, the amount of information to be stored and managed is immense. This data deluge presents challenges in terms of storage capacity, processing power, and data security. Many smaller CA firms lack the technological infrastructure to handle this data surge. Investing in new software and hardware is a significant financial burden, especially for firms operating on tight budgets. Additionally, the expertise required to manage and analyze this data adds another layer of complexity. Another concern is the potential for errors and omissions. With such a vast amount of data to track, human error becomes a real possibility. A single missed entry or incorrect timestamp can compromise the entire audit trail, raising questions about the audit's integrity. Furthermore, the increased workload could lead to delays in completing audits, impacting clients and potentially slowing down business operations. CAs are already stretched thin, and this added burden could strain resources and impact the overall efficiency of accounting practices. From the government's perspective, the new audit trail rule is a crucial step towards enhancing transparency and accountability in financial reporting. In recent years, India has witnessed several high-profile financial scandals that have eroded investor confidence and tarnished the country's image. The government believes that a robust audit trail system will act as a deterrent against financial misconduct. By making it more difficult to conceal fraudulent activities, the rule aims to create a climate of compliance and discourage unethical practices. This, in turn, is expected to strengthen investor confidence and attract more foreign investment. Moreover, the detailed audit trail will provide regulators with a powerful tool to investigate financial irregularities. The ability to track every step of the audit process will enable them to identify red flags, trace the source of discrepancies, and hold individuals accountable for their actions. The government argues that while the initial implementation might pose challenges, the long-term benefits of a transparent and accountable financial system far outweigh the costs. They believe that the new rule will ultimately strengthen India's financial system and enhance its global reputation. The current situation calls for a collaborative approach where both CAs and the government work together to find practical solutions. The ICAI is actively engaging in discussions with the government to address the concerns raised by CAs and explore ways to ease the transition to the new system. One potential solution being discussed is providing financial assistance to smaller CA firms to upgrade their technology infrastructure. This could involve government subsidies, tax breaks, or low-interest loans to help them acquire the necessary hardware and software. Another suggestion is to provide comprehensive training programs to equip CAs with the skills and knowledge needed to effectively manage the new audit trail system. This could include training on data management, cybersecurity, and the use of specialized audit software. Additionally, there is a need to develop standardized guidelines and best practices for implementing the new rule. Clear and concise guidance will reduce confusion and ensure consistency in implementation across the industry. The implementation of the new audit trail rule is still in its early stages, and it remains to be seen how it will play out in practice. The coming months will be crucial in assessing the effectiveness of the rule and its impact on the accounting profession. It is important to strike a balance between enhancing transparency and ensuring practicality. While the government's intentions are commendable, it is crucial to address the concerns raised by CAs and find ways to mitigate the potential burdens. The success of this initiative depends on the willingness of both CAs and the government to work together. Open communication, collaboration, and a willingness to adapt are essential for navigating the challenges and harnessing the potential benefits of this new era of audit trails in India. The ultimate goal is to create a financial reporting system that is both transparent and efficient, fostering trust and confidence in India's economy. The new audit trail rule is not just about compliance. It's about building a culture of transparency and trust in India's financial system. In an increasingly globalized world, maintaining high standards of financial reporting is paramount to attracting foreign investment and maintaining a strong economic standing. By enhancing accountability and making it more difficult to manipulate financial data, the new rule aims to restore confidence in corporate governance and promote ethical business practices. This, in turn, will benefit not just investors, but the overall economy. The journey towards achieving these goals will require ongoing dialogue and collaboration between regulators, accounting professionals, and businesses. By working together, they can shape a future where transparency is not just a regulatory requirement, but an integral part of India's financial landscape. The success of this endeavor will ultimately depend on the collective commitment to uphold the highest standards of financial integrity.